You finally did it. You bought life insurance. Maybe it took weeks of research, comparing policies and talking to agents, but you made the decision. You took that important step to protect your loved ones, and now you have that policy in your hands. It's a big moment, one that brings a sense of relief, knowing you've done something responsible for your family's future. You want to protect your family if something happens to you. That's the whole point, right? You imagine your partner, your kids, or maybe even your parents being able to stay in the home you built together, pay the bills and keep their lives moving forward, even if you're not there to help, but, a nagging worry lingers. It's that little voice in the back of your mind that asks, will this actually work the way it's supposed to? You've heard stories, maybe from friends, maybe online, about families who thought they were covered, only to run into problems when it mattered most. Will your family actually get the money when they need it most? Will the insurance company come through, or will there be unexpected hurdles, confusing paperwork, or even a denial? These are real concerns, and you're not alone in having them. It's a question that keeps many people up at night. The thought of your family struggling, not just with grief, but with financial uncertainty, can be overwhelming. It's natural to want reassurance that you've truly secured their future. After all, you've worked hard to provide for them. Every paycheck, every late night, every sacrifice, it's all been for your family's well-being. You want to know that your efforts will count for something, even after you're gone. The last thing you want is for your loved ones to face financial hardship on top of their grief. Losing someone is hard enough. The idea that they might also have to worry about paying the mortgage, covering daily expenses, or even funeral costs is heartbreaking. The good news is that most life insurance claims are paid out without a hitch. Insurance companies are in the business of paying claims, and the vast majority of families do receive the money they're promised, often within weeks of filing. But sometimes claims get denied. It doesn't happen often, but when it does, it can be devastating. Maybe there was a mistake on the application, or a missed payment, or something in the fine print that caused a problem. And honestly, it's heartbreaking when families who are already struggling with loss have to deal with this added burden. The emotional toll is heavy enough. No one should have to fight for the support they were promised. So what can you do to make sure your family actually gets the money? Let's talk about why claims sometimes get denied, and more importantly, the steps you can take right now to prevent that from happening. With the right knowledge and a little preparation, you can give your family the peace of mind they deserve. Life insurance is, at its core, a financial safety net designed to protect the people you care about most. Imagine it as a promise you make to your loved ones, a way to ensure that even if something unexpected happens to you, they'll have the support they need to keep going. It's about providing stability and security so your family can focus on healing and moving forward, rather than worrying about money during an already difficult time. To make this promise work, you pay a regular amount to the insurance company, known as a premium. This can be monthly or yearly, depending on what fits your budget and lifestyle. Think of it like a subscription for peace of mind. Just like you pay for streaming services or your phone bill, you're investing in your family's future security. The amount you pay depends on things like your age, health, lifestyle, and the amount of coverage you want. If you pass away while your policy is active, the insurance company steps in and pays out a lump sum of money to the people you've chosen. These are your beneficiaries. Beneficiaries can be your spouse, children, parents, or anyone else you want to support. This payout is often called the death benefit, and it's typically tax-free, giving your loved ones immediate access to funds when they need it most. The money from a life insurance policy can be used in so many ways. It can help your family cover everyday living expenses like groceries, rent, or mortgage payments. It can pay off outstanding debts, such as credit cards, car loans, or student loans, so your loved ones aren't left with financial burdens. Some families use the money to fund their children's education or invest in opportunities for the future, helping them achieve dreams you always hoped for them. Ultimately, life insurance is about peace of mind. It's knowing that even if you're not there, your family will have the financial resources to maintain their lifestyle and pursue their goals. It's a way to show you care, even after you're gone, and to leave a legacy of security and love. But remember, this safety net only works if you set things up correctly from the start. That means choosing the right policy, naming your beneficiaries clearly, and making sure all your information is accurate and up to date. It's also important to review your policy regularly, especially after major life events like marriage, having children, or buying a home. Being honest with the insurance company is crucial. If you leave out important details or provide false information, your claim could be denied when your family needs it most. Keeping your end of the bargain means paying your premiums on time and updating your policy as your life changes. Now let's take a closer look at some of the most common reasons why life insurance claims get denied, and more importantly, how you can avoid these pitfalls to make sure your loved ones are truly protected. Imagine this scenario. John, a seemingly average guy, sits at his kitchen table filling out a life insurance application. He pauses at the question about smoking. He hesitates, then checks the box for never smoked. In reality, John enjoys a few cigarettes each week, but he convinces himself it's not enough to matter. After all, it's just a small detail, right? He figures the insurance company will never know, and besides, he's otherwise healthy. John rationalizes his choice at thinking, it's just a few here and there, no big deal. He doesn't realize that even these little white lies can have big consequences. Many people think that stretching the truth on insurance forms is harmless, especially when it comes to habits they consider minor or occasional. Tragically, a year later, John unexpectedly passes away. His family, already devastated by their loss, turns to the life insurance policy for support, believing it will help them through this difficult time. But when the insurance company reviews John's claim, they launch an investigation. They uncover medical records and evidence of his smoking habit. Because John wasn't truthful on his application, the company denies the claim. The financial safety net his family was counting on disappears in an instant. Unfortunately, this kind of situation happens more often than you might think. Many claims are denied every year because of inaccurate or incomplete information on applications. Whether it's about your health, your lifestyle, or even your hobbies, not being completely honest can put your loved ones at risk. Insurance companies use the details you provide to determine your coverage and premiums, and any falsehoods can have serious, lasting consequences. When you apply for insurance, remember that the company is relying on your honesty to assess risk and provide the right protection. Being upfront and truthful is the best way to ensure your family is truly protected. Any discrepancies, no matter how small, can raise red flags and jeopardize your claim. So when it comes to insurance, honesty really is the best policy. Life gets busy, right? We've all been there. Maybe you forgot to update your payment information after getting a new credit card, or perhaps you simply overlooked a payment notification. Whatever the reason, missing premium payments can lead to your policy lapsing. This means your coverage is no longer active. If something were to happen, your beneficiaries wouldn't receive a dime. It's crucial to make those payments on time every time. Consider setting up automatic payments to avoid any unintentional lapses. You might think, my medical history is private. Why does the insurance company need to know? Here's the deal. Insurance companies use your medical history to determine your risk level. If you have pre-existing conditions, they need to factor that in when calculating your premiums. Let's say you have a history of heart disease but fail to disclose it when applying for life insurance. If you pass away due to heart complications, the claim could be denied. Honesty is the best policy, literally. We know reading those lengthy policy documents is about as exciting as watching paint dry. But here's the thing. Those pages are filled with crucial details about what is and isn't covered. For instance, some policies have exclusions for high-risk activities like skydiving or mountain climbing. Others might have limitations on payouts for deaths caused by certain illnesses. Make sure you understand these terms to avoid any unpleasant surprises down the road. Buying life insurance is one of the most loving things you can do for your family. But it's not enough to just sign on the dotted line. Be honest on your application, pay your premiums on time, and read your policy carefully. Remember, knowledge is power. The more you understand about your life insurance policy, the better equipped you'll be to protect the ones you love. Stay informed, ask questions, and have peace of mind knowing that your family's financial future is secure.